Welcome back, everyone. Welcome back to InvestED. Today I'm here to answer your burning questions about ETFs. So let's get started. So the first question is, what are covered calls? So imagine you own a stock and you want to earn some extra cash while holding that stock. A covered call is kind of like selling the right to buy your stock to someone else for a short period of time. You get paid upfront. That's called the call premium. And if the stock stays below an agreed upon price, you get to keep the cash and the stock. However, if the stock rises above that agreed price, it's now your obligation to sell that stock at that agreed price. So while not without risk, covered calls are often used as a way to earn income on a stock you already own and you don't really want to sell it just as of yet. Okay, question 2. What are the benefits of investing in an ETF versus a regular stock or bond? So instead of just buying one share of a company's stock or one individual bond, an ETF has the ability to hold dozens or even hundreds of stocks or bonds. This spreads out your risk, broadens your exposure, and gives you the benefits of diversification. Plus, an ETF is often affordable, scalable, and easy to trade like a stock. Question 3. What are thematic ETFs? So these are ETFs that are built around big ideas like artificial intelligence, clean energy, video games, or aging populations. For example, an artificial intelligence ETF that would invest in companies involved in AI across multiple capacities, call it development, application, or just the advancement of AI in general. Thematic ETFs are a perfect way for someone to participate in a trend that you believe in while still getting those diversification benefits that we talked about earlier. It's like backing a theme or an idea instead of just one individual company. Question 4. Are ETFs only for stocks? Not at all. Think of an ETF kind of like a financial vehicle built to carry multiple types of assets for whoever holds it. ETFs can hold stocks for growth, bonds for income and stability, commodities like gold or oil for diversification, even cryptocurrencies like Bitcoin and Ethereum, and now even financial derivatives. Those are often used for alternative strategies. The flexibility that of these holdings lets you navigate different market conditions and goals that you have, whether it be cruising towards retirement or tackling short-term opportunities that you see in the market. There's likely many ETFs out there that fit you and your goals. Okay, so with that, that's the end of the video. Thanks for all the questions. Happy to get more in the comments and address any ETF questions you have in the future. Thanks for listening.